Good afternoon, everybody, and a very warm welcome to all those present on call. And I sincerely hope that all of you and your near and dear ones are, keeping the best of health and are safe and protected from this current pandemic that is going on. Joining me today, I have Rishi, our CFO, Nilesh, who is our company secretary, of course Jan, who works in my office, and of course SGA, our investor relation advisors. So we had our board meeting in the morning, and we did put up the results immediately after that. So I hope all of you had the time to go through the results. It's a rather short time, but we had to do this because the Diwali break starts from tomorrow, so most of you would possibly not be available. So that's why we had to have this call on the same day itself. So I do hope that you must have had time to go through the results. Before I get into the numbers, I would start by providing a backdrop of the economic and industry scenario, as I always do. So you must be, of course, reading in the papers about the healthy recovery, the strong V-shaped recovery. In fact, when we plotted our figures of monthly sale against, from the time of, let's say, March onwards to this period, it is exactly, we could actually write the letter V in that graph. It was so accurate. I mean, it was absolutely a very strong V-shaped recovery, which is, of course, good news for all of us. Lots of positives to take from there. And in addition, the country has witnessed one of the best monsoons for some time. And the good part of monsoon in most of the country and in Maharashtra for sure is that the spread has been even, so that is even better. Areas which typically were drought prone for long periods of time, all the dam catchment areas are full, so we can expect a very good crop, so which again bodes well for the economy, particularly the agri economy. Going forward, while we have shared results for Q2, definitely we had a good October. You again must have read the sales figures that the OEMs have posted for October, very, very robust sales figures. And November is a festive month, so that momentum should definitely continue. The automotive industry has worked hard during this COVID situation to increase production and sales while safeguarding the safety of employees and the customers and the supply chain as well. So it's been a very tricky situation for all of us. On one hand, we have to deliver record numbers, and on the other hand, you have to ensure that physical distancing is maintained. So it's been really tricky. Added to that fact, we had our share of, despite all the excellent precautionary measures done in Gabriel as across all Anand Group plants, despite that we had our share of COVID cases. Fortunately, all of them are recovered. I think there's a slide on that as well we have put up in our presentation. So all of them are recovered, and the ones, about 10 of them are still undergoing recovery, but they are all asymptomatic and doing well. So, so we have been able to take care. But what happens is, once one person comes into quarantine, you have the Arogya Setu app. Then all his contacts, their app turns to moderate or high risk. And as a policy, we ask that those persons through contact tracing also to stay at home and stay under quarantine. So that put a lot of pressure on managing the supply chain. But despite that, I'm glad to share that the team across all plants of Gabriel and our supplier partners did an excellent job, I must say, on delivering the numbers. Several factors that we have to see in Q2. One is passenger vehicles and two-wheelers, both are positive. Although, of course, the base for last year, as you know, from July onwards last year, the numbers started going down. Till June, the numbers were still okay. So we are looking at a small base of last year. Based on that, the numbers have been very strong. For the month of October, if you see the OEM figures, passenger cars has grown by 18% two-wheelers have grown again in the average of same 18 to 20%. In fact, even commercial vehicle, while they have not grown year on year, but if you see month on month, September to October, even commercial vehicles have grown 15 to 20%. So, that's the only segment that's been a laggard. Even that has started showing early signs of at least, the weekly rate of production going up. So that is something good for us. Now coming to two-wheelers and four-wheelers, especially entry-level passenger cars. I think we all know the reason. Demand for personal mobility is driving, I think, a large part of that. There was a lot of pent-up demand. Naturally, people were not stepping out for a long time. And then there was BS6 transition also. So, people had postponed their decisions in the month of February, let's say from Jan to March, and then the lockdown happened. So even those people have decided to now buy. So, all this put together, there has been a lot of pent-up demand, which is happening. Having said that, we also thought that pent-up demand will start showing some tapering off, but thankfully we are not yet seeing that. I'm not telling that it's beyond us and this will sustain the way it is going, but at least we have been in the industry pleasantly surprised as to the sustenance of the volumes, right from July, then August, then September, then October. So, it's so far, I must say, so far so good. So that is on the industry, and of course you all know so there are two. I'm sure many of you will have those questions about how does the outlook look for the next few months and next quarter. So there are two aspects to it. One is a clear and present danger, I must say, of a second wave. We are seeing what is happening in Europe. We are seeing what is happening in US. And India is no different. We can't, let's say, fool ourselves by telling that no, the second wave is not going to happen in India. It certainly will happen. And if you have seen the pictures going around, or if you've seen the news coverage of the Diwali rush that you see on various roads in India, in all the cities, it's really frightening. So for sure, there will be a second wave. So based on the second wave magnitude, the government may have to take some action. So we don't know which way it will go. So it's very, very difficult firstly to predict what will happen. I think none of us in the industry are able to give any prediction. We'll have to take each month as it goes. That's what we are doing. So this is the negative side. And on the positive side, yes, there are some signs of, again, we don't know, but there are signs of vaccines being reported, being successful, and also there might be some positive feel-good factor as well. So both can happen. So all I'm saying is it's very, very uncertain. It's very, very difficult for us to take a call on what will be the volumes. But as I said, it's so far so good. Now moving on to the performance of our quarter for Q2. I'll get into that. It's of course shared in the presentation. We had, of course, the Q1 was almost a washout. We did barely 120 crores of sales in Q1, which is far less than our monthly sale, normal monthly sale. But Q2 has, bounced back to our normal sale level at least. We did almost 460 crores, which is still 2.7% down compared to the same quarter last year. But then, if we take the good part, that yes, at least it's come up to 450 plus levels. So this will definitely help us. We were able to sustain certain cost optimization and productivity enhancement measures implemented during last year. So in fact, like I had shared in the past 2 or 3 calls, we had kicked off an initiative called Core 90, Cost Reduction 90 Days, in the month of July last year. So that, we have revived, we have refreshed, we have reinforced. So that is clearly giving us some good benefits. So we were able to improve our margins despite a small drop in sale. So you can see that as well in terms of EBITDA. and PAT is up by, EBITDA is up by almost 16%, despite sale being lower by, EBITDA is up by 14%. Yeah, despite sale being lower by almost 3%. And in terms of PAT also, if you see, the PAT was up by 65.5%. Moving on to the balance sheet and cash flows, we continue to maintain a robust balance sheet position with a net cash of 211 crore, and we have continued our focus on cash, which has led to a healthy cash generation to the tune of 111 crores during the first half of the year, despite literally a washout of the first quarter, as I mentioned. Coming to segment-wise performance, which is on slide. Segment mix. Yeah, which is on slide number 16. You can see our two-wheelers is now forming 70%. Again, a combination of the market dynamics, because two-wheelers naturally are doing much better. That the recovery there has been the best, owing to personal mobility plus rural economy, both factors. Passenger car is 18% and commercial vehicle and railway is only 10% as of now. In terms of the detailed performance in two three-wheelers, which is on slide 17, here, our market share continues to be 25%. We have some new programs from TVS, our key customer, Bajaj. We are working on a new program with Suzuki. We have got an LOI for Suzuki two-wheelers, one new program. We are working on a, not yet got the order, but working on a new program with even Honda motorcycles. So several new programs there. Also, our engagement with electric vehicles, continues with all the key electric vehicle manufacturers. The top three customers remain TVS, Yamaha, and Bajaj Auto. In terms of passenger car, we had some really bad times, particularly in the last year when we lost out on the Omni and our WagonR going away. But then from there on, for the last 3-4 years, we've been working on building up a strong pipeline. So I'm glad to share that pipeline is now coming up, with Espresso doing very well, with Brezza also doing very well of Maruti. We have one more new platform called Y0M of Maruti, which is the replacement of Alto. We are working on another new platform which we are very likely to win with Maruti. In fact, two new platforms, and another program. Volkswagen, the new India vehicle, that is already with us. So that's right now, and we have given all the prototypes already, and the development is on, and the SOP should start in the month of March. We are also now on a Tata Motors program. Initial few supplies have just begun. Of course, the larger lot will happen from calendar year 21. In terms of commercial vehicle, we continue our strong position in the market. So practically all development. But the key that I want to mention here is Leyland launched the Bada Dost, as you all must have seen. A very nice vehicle. So on Bada Dost is 100% with Gabriel. Aftermarket, the pull has been good. We certainly have been trying to push as much as possible in the aftermarket, and things are moving now, certainly. In fact, for the first half, we did 107 crore of sale. We've added many new products. We did share last time that we added the brake pads. So we are widening the dealer network and the presence across the country for this very fast-moving item called the brake pad. Initial response has been good, but we of course will have to keep a watch for this year on this product, and then build upon those for the coming years. Another positive development is the exports, which I've been sharing for so many years, I must say. We've been working on this, and we finally won those orders, and I'm glad to share that the deliveries have started now. Volkswagen Russia, we have already dispatched almost 6. Every week we are dispatching one container. So that is going on the regular stream. We have already done 6 or 7 shipments, and that continues all through the year. and of course on the DAF Netherlands, those supplies will start from somewhere the end of this month. So even that will be done. So in fact, we had on a single month basis, we had among the best export months in OE business in the past month. So just the picture of those two products is on slide 22, which I mentioned, DAF and Volkswagen Russia. Talking about our overall vision as to what we are planning to do, we had shared that we want to be definitely in the global top 5. We had kept ourselves an aspiration of 2025. Yes, now that 2025, of course, will, owing to this COVID, the whole thing, in terms of timeline, does shift. But in terms of our direction, we are firmly on this, and we are all working towards how to get to be in the global top 5. The key drivers being, one, we have to increase our exports. Two, domestic dominance in each segment. It's not only commercial vehicle or only in let's say in aftermarket, or we are going to try to do our best in every segment so that we achieve domestic dominance. The third lever, of course, is inorganic growth, for which we are actively scanning. We had advanced discussions, but not sounding to give an excuse, but yes, certainly COVID has, again, because the volumes have gone down, so people are wary of valuations, and they have, many of them have put their discussions on hold. So that's what we will have to wait for some more time. The good part again here is, the bounce back is good, so we should quickly restart these dialogues where we left off. And the fourth and most important is quality and technology. This is something that we pride ourselves upon, being a completely, if I may call, Atmanirbhar player. We are completely Indian company, so we have our own R&D among the best qualified team that we have in the country. If you see the next slide, I had shared with you that we are building our tech center, so the building is almost ready. What you see here is an artist impression. This is on slide 24. But yeah, the building is almost ready and should be complete by the end of this year. We should be ready with it by January 21. The machines have already moved to this new building. And we also added a new ride trailer. This is very important for our business, particularly passenger car and commercial vehicle. So we have added, we had one ride tuning bus. Now we have a ride tuning trailer as well, which is, glad to share that again, both these ride tuning vehicles are booked for almost 365 days a year. So that is the kind of pace of development that is happening, in addition to, of course, increased demand for development time of customers. So both these are on technology front. So this is, in short, what I wish to share as regards the presentation. I would now open it up for questions. Certainly, I'll come back at the end of the questions and maybe try to sum up, based on the questions that all of you asked us. So thank you, and over to you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question at this time, please press star and 1 on your phone. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, anyone who wishes to ask a question at this time may press star and 1 on your phone. We take the first question from the line of Nikhil Upadhyay from SEC Investments. Please go ahead.
Hello.
Yeah, please go ahead.
Yeah. Good afternoon. Thanks for the opportunity and congrats on a decent recovery. Sir, my question is basically on three parts. One is, as you mentioned that last year we had this loss of the Omni and the WagonR business. Now, with the kind of the new business wins which we have with the Tata Motors and everything, do you think that these new businesses will compensate the loss of business which we had because of WagonR and Omni? And overall, what is the outlook you are getting from the OEMs in terms of the next 2 quarters, in terms of the order booking and all? If you can share any thoughts on there, not any number specific, but qualitatively, how are you looking at it? That is on first. Secondly, on exports, I understand like it's good that the VW Russia and the DEF orders have started moving, but there was also one product relaunch in Colombia where we were earlier supplying and that product was discontinued. Any updates on that, or if you can share any thoughts? And with the product now we being supplying to DEF and VW Russia, and you also mentioned that in order to be the top 5 we have to increase our exports. How do you see the export timelines maturing or improving for us, because now we would already be supplying to 2 large players? So if you can share your thoughts in terms of getting new order wins in exports, how do you see the timelines improving for us?
Okay. Nikhil. You asked basically 4 questions. So firstly, thanks for your compliments. So on the question of Omni and WagonR, yes, the new orders that we have got will certainly compensate, because one is the espresso is kind of a segment which is it is a little new, and the Alto which is going to come, currently Alto we share only some part of the business, but the new Alto we share 100%. So that definitely should help us more than compensate what we have lost. Yes, it will happen over the next year. It will not happen this year, but certainly next year we'll be back to where we were in terms of passenger car. We also have won the Peugeot Citroën business, so that development is also going on. You know that we are on the new Thar of Mahindra, so that they have stopped the booking because they have already crossed 20,000 bookings, which is almost 6 to 8 months, production time for them. So that vehicle is really good. So we are 100% on that. We are 100% on the new XUV of Mahindra. Even that promises to be a good vehicle. So yes, we will definitely compensate for the loss and in fact, do even better. In terms of outlook of business, which was your second question, I did try to answer that, while the hit rate continues good in November as well, there is Diwali break, so to that extent there will be, 4 days of loss of production and sale because, the whole country is off for those days. But the hit rate is better. And in December also, the schedules that we have got, as regards the hit rate is quite good. But yes, actually most of the Japanese OEMs go for a shutdown in the month of December. So to that extent, again, in December we will see, let's say the last 4-5 days of December, there will be no sale typically in most of the customers. They all go for an annual shutdown. But come January, at least the schedules that we have got, some of the OEMs have shared with us very clearly that the hit rate is going to continue in the Q4 as well. So right now, I don't want to second guess or try to put my own judgment on that. We'll stay with that. That it looks generally good. For the other two questions were on exports. So on Colombia, glad you remembered that we said that our vehicle has gone out of production. But yes, the new model will be starting in the next financial year. So we are on that, and we should restart our supplies with them very soon. On the export timelines, which was your fourth question, now that we have won Volkswagen Russia and DAF, I did mention that, it took us, for DAF, it took almost 6 years for us to get into this business. So it's a very, very long lead time. But again, we get one, then you get the second one easier. Like while we are discussing these two, we are already in an advanced stage of discussion for another OEM for an export order. So, one, has a positive effect on the other. And now the timelines will not be like the earlier, and definitely the timeline will reduce further on exports.
Oh, fine, sir. Thanks a lot.
Thank you, Nikhil.
Thank you. Thank you. A reminder to the participants, anyone who wishes to ask a question at this time may press star and one on your phone. The next question is from the line of Jay Kale from Elara Capital. Please go ahead.
Yeah, thanks for taking my question. So I have two questions. First is, if I have to, just look at your two-wheeler, four-wheeler, and CV revenue contribution, and over the next, say, 2 or 3 years, passenger vehicle, you mentioned that you just have an 18% market share. So how do you see the market shares in these individual segments? And what would be your assessment of the pecking order of growth rates, X of the market growth? But from a new client addition wins or increasing content, which segments within two-wheeler, four-wheeler, and CVs do you see the highest growth potential for you? If you could comment on that, that would be my first question.
Okay, so Jay, on the segment-wise, clearly passenger car, our share is very low. So actually the upside there is, while the market growth is one part, but for us to expand or grow, the upside is the best. So naturally that's what we want to do, and we have some good programs lined up. So I'm sure that the passenger car, growth rate should be healthy. And commercial vehicle, we have kind of saturated. We'll have to go by what the market grows. In two-wheelers, again, I think we have some room to grow. Certainly, we are only 25% of the market share. Yes, there are some market dynamics, but again, there is chance for us to grow there as well. So both these segments are clearly possible. In passenger car, in addition, we also have the export play. So in terms of growth of the total business in passenger car, can definitely be quite good.
Sure. And just one question on the PLI scheme that has been announced yesterday. If you could comment, I know it's too early to get the contours of the scheme, but any potential benefits that you are likely to get, or you are in conversation with any of the customers who could kind of start sourcing from you, or any kind of localization that you would do for some export markets, which could become viable now with this PLI scheme? Are you looking at it constructively?
Yeah, so we were just discussing before the call. It's PLI is too new for us to actually gauge what are the details. I think we'll have to wait for that. So I really cannot answer that right now. But it's a good thing to happen. Also, automotive components share a big portion of the total PLI. But yeah, we'll have to wait for the details. Unfortunately, I don't have it right now.
Sure. Thanks. And just if you could just comment, what is the potential market share of passenger vehicles that you could look at in the next 2 years from the 18% currently? I mean, you spoke of huge opportunity, but could it be like 30, 40? I mean, any directionally, what is the kind of opportunity seeing the orders that you are having currently?
Well, I mean, internally we had drawn plans, but yeah, I mean, at least get to 22-23%, certainly. So
Sure. Thanks.
what you can see is, we have grown from the last presentation to this 15 to 18%. We can have 23%, and going forward, I can see definitely even 25%.
Sure. Thanks and all the best.
Thank you. A reminder to the participants, anyone who wishes to ask a question at this time may press star and 1 on your phone. The next question is from the line of Sandeep Verma from Axis Bank. Please go ahead.
Hello. Good evening, sir. Hello.
Yeah. Sandeep, is it right?
Yeah. Good evening, sir.
Good evening. Yeah.
Sir, just one thing. This EBITDA margin improvement, what I can see is a part of improvement has came on account of, commodity prices being benign. Now that the commodity prices have started moving northwards, will you be in a position to maintain this kind of EBITDA margin in Q3 and Q4, sir?
So, Sandeep, hi, this is Rishi, and thanks for asking the question. Actually, with the changing commodity cycles either downwards or upwards, we've seen over the past so many years that some amount of that does get impacted positively or negatively. But by and large, we have a back-to-back arrangement, so there may be some timing differences or some index differences. But by and large, we are insulated from the movement on a long-term basis.
All right. And from the export sides, sir, how do you see things panning out given the second wave, being experienced in European and in the US? So, are you experiencing any kind of challenges in your exports?
Honestly, Sandeep, we are not seeing any challenge. I think the schedules, in fact, we just received the schedule right up to March from, the Russian customer. So they are pretty steady, and neither in these last few months we have seen any cut down in any plants. So I presume they are somehow managing the show. You also are aware that, in all these places, the economy is, still being continued reasonably well despite there being lockdowns.
All right. Thank you so much.
Thank you. The next question is from the line of Saurabh Shah from QRG Investment Advisors. Please go ahead.
Yes, hi. Good evening, gentlemen. Just coming back to the margins, if I look at the slightly longer term trend on this, just before the slowdown began last year, we were sort of more in the vicinity of 8.5% to 9.5% kind of EBITDA margin. While we've seen a sharp recovery quarter on quarter, obviously, and maybe almost 100 bits plus year on year, by when do you think we get to that 9%-ish margin? And one would hope that, I guess, if we get back to that 550 crore kind of run rate quarterly, we should be higher than that. And if that is the case, what will sort of drive it? What are we doing in terms of cost control, etc.? Because otherwise, if I look at it, most of our cost items are within a 5-7% range of last year.
Yeah. So, sir, you said it right that if we cross this 500 crore level, naturally our margins will, the EBITDA margins will get that, bump up. Certainly, we can expect to be in the 9% range because, we are built for volumes. We have capacities installed. So naturally anything that is above 500 crores will certainly help us. So we'll have to wait for that 500 crore to happen, sustained basis. Till that time, we have clearly, made a elaborate plan for this cost reduction activities. We still have several ideas in our hopper, cost reduction hopper as we call, to ensure that we continue on this cost reduction drive. 9.5%. I see no no problem in getting there, but yes, we need some tailwind of volumes.
Sure. And can you maybe elaborate a little bit more on how much, I guess COVID would have put a bit of a spanner on the cost reduction plan, but at least how far, because we've been talking about this now for, I guess, almost last 4 quarters. So how much did we manage to get done? What is our focus? By when do you think we can have some quantifiable savings?
So we had clearly, Saurabh, if you see, even if I take just let's say the last quarter, comparable quarter last year, Q2 to Q2 this year, you can see, my margins are, my top line is still low by 3%, but my is up by 14-15%. So even in this, and mind you, we also have, some added costs put on us due to COVID, like, the masks, the sanitizers, and then maintaining a distance. So productivity also takes a little bit of beating, so all that you have to roll in also in that. So clearly, this cost reduction exercise has helped us shave off, good percentage points from each of our cost heads, right, from raw material to fixed overheads to variable overheads, in every aspect. So Rishi, you want to?
So the barring the commodity movement, which Rishi actually explained is a pass-through with a bit of a lag or sometimes it's whatever. There is some amount of, that's what I wanted to get to. So there is some amount of raw material or gross margin pickup, which is whether it is value engineering at our end or just process enhancement,
yes.
which we will get to retain as and when the cycle turns and volumes come back.
Oh yes.
Is that a fair assumption?
Most certainly, yes. We do whatever value engineering we do, while we have to share with the customer. Again, there's a mix. Some things which we may not share with the customer. Some we have a sharing basis with the customer that you take 50%, 70%, we get to retain 30%. Sometimes it's 50-50. So that certainly happens, yes.
And on the export front, are margins in line with what we make on the domestic side, on the domestic OE as well? It's not.
It's a mixed bag again. Some exports, the aftermarket exports certainly is good margins.
Sorry, I meant exports OE. These 2 new orders, so the VW that has started and the Netherlands one that we will start.
Yeah.
I guess volumes are still ramping up, but I just wanted to sort of understand the implications, because I would imagine that this will have slightly longer working capital cycles as well.
Exactly. So there are, of course, the initial costs, till the whole product settles, we have some initial costs, and we also cannot take some of the cost reduction VAVE measures for some time. So naturally, we start with a little higher raw material cost on these programs. But as the program matures, we certainly will be able to get good margins, and yes, we have additional incentives as well, which hopefully will continue. Yeah. The MEIS scheme, as you know.
Okay, got it. Okay, wish you all the best, and hope to see more of this and better times ahead.
Yeah, thank you. Same to you.
Yeah.
Thank you. A reminder to the participants, anyone who has a question at this time may press star and 1 on your phone. The next question is from the line of Pankaj Bobade from Axis Securities. Please go ahead.
Thanks a lot for taking my question, sir. Just wanted to understand the future on railway side. We never talk elaborately over it. Is this where do we, as I suppose we are one of the leaders in supplying right quality equipments to railways, but nothing is happening out, sir, on that front, I suppose.
So Pankaj, last year we had a bumper year for railways actually. We had some very good volumes of railways because railways is shifting to this new technology coach.
LHB.
Yeah, that's right. So, but what has happened after COVID, some of their their production is literally half, or even less than half. But we are not, we have to be worried in the sense, yes, in terms of immediate sale and profitability. But that's, the railway is a government enterprise. Naturally, I don't think the orders will go anywhere. It's not a loss of order. Their tenders are getting shifted to next year. So we'll have to wait. So unfortunately, this year, if you ask me, 3 segments have really taken a beating. One is railways, second is 3-wheelers, and the third is buses. So these 3 segments are really facing the brunt of COVID. So we'll have to wait. But yeah, surely for sure they'll bounce back. I don't see a reason, and we will get back our numbers. That should not be a problem.
So maybe 6 months down the line when things normalize, yes. I suppose they will normalize. What is the potential where we can reach in these 3 segments? Say, because at least in railways, being the market leader, we should have substantial revenue share.
No, see, the volumes of railways are very small, all said and done. They're minuscule compared to the other, even commercial vehicles. But yeah, the bottom line impact is quite good. So that is what we are currently facing. Unfortunately, because of this downturn, that's what we are missing out on. And secondly, Pankaj, we are not the leader. It is, this is a tendering business, so it goes completely by bidding. So I would say we typically are 25%. So we had got the initial higher percentage because we developed LHB the fastest. And yes, going forward, we being Indian supplier and government focused, particularly railways focusing on being self-reliant, we are hoping that we should garner a better percentage. But yeah, I would say 25% is what we share.
So any idea what would be the total spend the government or IR would be doing for upgrading to LHB coaches?
Pankaj, I have no idea on that, but we can revert back on that.
Sure, sir. Thank you. Thanks a lot.
Clearly, I had read an article about, I think 3-4 weeks back, where they have told that all the high-speed trains, high-speed meaning Indian high-speed, which is above 130, they are mandatorily changing to the LHB type. So the conversion is going to really increase. And, eventually I very clearly see the way it has been going over the last 3 years. Everything will get changed to LHB except the freight.
Except the?
Freight.
Freight, okay. Sure. Thank you. Thanks a lot.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question at this time, please press star and 1 on your phone. As there are no further questions from the participants, I would like to hand the conference over to the management for your closing comments.
Yeah, okay, thank you. So thanks for your questions. I think, of course, we had a little less questions, possibly less participants as well due to the time paucity. Nevertheless, I only would once again thank all of you for your patience and having gone through the presentation and having asked us some interesting questions. I'm just hoping that this good production rate, this good recovery, V-shaped recovery continues, and hope that the second wave does not happen at least in India. Let's see how it goes, but definitely times are not as gloomy and doomsday scenario like was painted earlier. I think we all have to come out of that. And yes, of course, we need to continue to stay very, very cautious, not let our guard down, and take all the precautions is my sincere request and advice to all. And we have to take extra care during this festive period. I think that's very important for all of us. So wishing all of you and your families a very, very happy and safe Diwali, and a very, very happy new year going forward. Thank you very much.